Hey guys, welcome to another video brought to you by Total Control Traders. Let's get right into it. First one, SPX. Big bear action today. Increasing bear volume. Is there a real cause for concern? So as of the last time that we reviewed the market on a deep dive, a couple days ago, dip being bought here, we reviewed the US dollar, the gold, Bitcoin, basically everything, and then we did not see a real cause for concern. So the way I'm seeing this right now, big bear volume, it is a little bit of a red flag. We are seeing a drop right to this previous high, this zone that I had highlighted. There's a chance that we could drop a little bit lower to where these double wicks were formed. So for bulls, the 43.74 must hold on SPX. As of right now, we are seeing a slight bounce in the after hours from that zone. Target remains at 44.90. However, there is going to be some anticipation for some chop going into Friday. Friday is OPEC's option expiry on the monthly option expiry. So generally, there is some either bearish action or chop action on those type of weeks. I believe it was somewhere around 60-70% of the last 10 to 12 those OPEX weeks that I counted. Anyway, so expect a little bit more bearish action potentially. If not, then it will be choppiness. So we could see something like this from here. A little bit of a bounce to GP, which would be right around here. Back to another GP. And then that would make it past Friday already before a next leg move up. So something like that, you know, it's not, I don't see any real concern unless there is a big catalyst that's going to come out. Don't think the market would be looking extremely bearish, at least not yet. There's no foretelling signs based on the leading indicators. All right, next is NAS. So what are the chances? It worked out exactly as we anticipated. Well, anticipated it could happen, in the sense that on August 10th, when the bears started showing up and lost at 88, it had mentioned that, you know, make sure if you're playing NAS, if you're playing big techs, whether if it's Amazon, Apple, whichever it is, make sure to prepare yourself for a possible scenario of this: losing this trend line, backtesting the trend line, and then a drop to this key zone, whether it's the top of the key zone or the low end of the key zone. So this ended up, it dragged out a little bit longer, but it did lose that trend line. It backtested 2 days in a row. Third day did bought, unable to touch the trend line, and then now we are seeing that follow through from the bear, and we're at the lower part of the key zone. After our same idea, seeing a little bit of bounce. So between both SPX and NAS, there are key zones, that previous all-time high zones that we were watching, and we are seeing some support there. So from here, same idea, would expect some chop. If not, I don't imagine further bear, because further bear on NAS would be a pretty bad sign. If we were to see further bears on NAS, it could look like GP test, back down to the top of the next zone. That would be fairly bad for the bulls, because essentially, if we were to see this, the daily trend would be now changed to the bears. Do prepare yourself for a possible scenario of this, but personally, I am anticipating further bullish action to come on NAS. Is this a weekly bull flag? It is a weekly bull flag. We're going to want to hold that key zone. That's where the weekly 8 is right now. Do not want to lose this key zone. All right, next is Russ. So we had to redraw Russ wedge. Why does it look a little bit weird? Okay, yeah, that's why. We had to redraw a Russ wedge just because of the way that is playing out. We had to extend the wedge out a little bit, and instead of an inner wedge, I removed the inner wedge and drew a outer wedge instead. So this was the main wedge that we were tracking before, but now because it's broken bear a second time now, I'm looking at a potential of this being the real wedge, this outer one, with one touch, two touches, and we're gonna see if there's gonna be a third touch. So Russ remains weak for now, but essentially it is a monthly bull flag, and we are right at that monthly 8 right now. Do not want to lose it, not to mention close under it. End of August, there are still a couple weeks left, so the chances of us closing under it is still there. The risk remains. Bear volume, relatively speaking, it's likely going to be lower than July's bear volume. So there are no real red flags on Russ. We're right at the there's a lot of trend lines going on here. Let me clean this up here. So this was the old inner wedge, which didn't seem to apply much as of recent. So let's remove that. Support, so this resistance still exists, support still exists. GP, and now we have lost the GP. So we rejected from the GP, and now we lost the GP. So it is weak on the daily. The daily trend is now in favor of the bear. Middle trend line here, we saw resistance, support, nothing for a long time. Support on the last one did not close under, so this trend line is not too strong, but let's see if we're gonna be able to hold this today, bounce from here. If not, most ideal entry for Russ bulls, we would be looking down at this potential lower trend line of a new outer wedge. Russ is making charting, honestly, Russ is making charting very complicated. It reminds me of Boeing and sometimes Tesla. You gotta draw the wedge further before the real move comes. So Russ has been sideways for a long time, and even if we were to, so let's say on the monthly chart, even if we were to go under, let's clear this, even if we were to go under the monthly 8, slightly wick, there is a strong support right here where we saw double wick here. We do not want to lose that. Bulls do not want to lose 21.14. Let's take a look at where, oh, we did have that wrong. 21.13, 21.14 area. Okay. So this is a must hold. Resistance, lots of supports, support again, again, and again. So 21.13 must hold. All right, next is Dow. So part of the reason why bearish action showed up on the market today was due to the minutes, and Feds are looking to taper stimulus, which makes sense that it's going to see some bearish action because there's going to be less cash going around for whether it's retail investors to invest or even institutional investors. So with that news, Dow has now gone back to the previous stall zone, the previous all-time high zone in between 34,831 to 35,101. Seeing a slight bounce in the aftermarket right now, decent bearish action. Same with both SPX and NAS in that zone that the bulls want to hold in order for a next leg move up. If we lose this zone, the daily would be looking at bearish trend then. All right, let's take a look at a few hot tickers. I stepped away towards the end of the day, so I wasn't sure how things closed. Looks like Boeing made new lows. Nvidia earnings came out. And the dip got bought, I heard. Yeah, the dip got bought. Big dip. Big dip in the after hours, and the dip got bought. Near the high. Okay, rejected the high of today. AMD seems unaffected by the Nvidia's earning. Roku is green after hours. Nope. Seems like a glitch. Okay, so Roku, one of the hot tickers. We'll cover that shortly, actually. Let's go in order of the thumbnail. First one, Tesla. Tesla, big bullish action today. Huge bearish action yesterday, the day before. Yeah, yesterday and the day before. Gap down, selling off, gap down, selling off. Dip getting bought right at the 0.786. So this was a... once looking at the loss of 650, was anticipating potential for a breakdown fake out. So had an order in, and very fortunate that the order got filled about 20 cents away from the low of days. It's just at 649 ish, and from there we saw dip being bought today, gap up, and big bull action. Volume is not exactly there yet. So we are seeing a rejection from day 8, and there is a gap left behind from Friday to Monday still. So eventually we'll be looking up at 714.34 to fill the gap, but gonna have to see a close over the day 8 first, and there is a key resistance at 700 still. We saw some chop here, lots of rejections around here, more rejections, did not close over, became support, and then became rejection again right at 700. So 700 is a key resistance. Once we make over that, would anticipate further prices to come. Now if this is the low that is in, and the higher low that's in, the next price target I'm anticipating would be around 774, right around that top part of the key zone, lining up with this channel that we're tracking, as well as the 1-to-1 extension. So that's the 1-to-1 from the low here to the high to the higher low. 1-to-1, 774. That's a target that makes sense. So both of these trend lines are very key. We can see chop around it, and now there's a lower trend line that's, maybe this one actually doesn't work that well. I would have anticipated this pandemic trend line to be a little bit stronger, but if you're looking at it, you know, we closed under again, slightly closed under, and then now the fourth time we're closing under. So this middle trend line of the channel doesn't seem to be working that well. What's working better is this most recent lower trend line, but I'll keep all three on for now. Regardless, target looking at 774. Gonna have to see a close over day 8 first. Next is PLTR. All right, on PLTR, big bullish action today, huge volume that came in, very nice volume. Earnings was the biggest volume we've seen in a while. Okay, so it wasn't bigger than this one. Yeah, so it was the biggest volume we've seen in a while, and yesterday was a dip buying opportunity. As you can see, the day 8 had held the whole time. We did not lose the earnings low. There is a gap left behind, but based on this chart, there was a chance that we can come back to fill it, which lines up with the GP. But based on the chart, how strong it is, this channel, this upper trend line of the channel, back tested again yesterday, and today it makes sense that we're running. So we ran straight into, or straight past, the resistance, but when I was looking at this chart, didn't make sense that we're ready to close over today, because let's walk through that. Okay, so even though we were seeing open increasing bull volume, big bull volume came in at 8:30, low bear volume comparatively, and then bull flag confirmation again into into new highs. Not new all-time high, it's just breaking the previous resistance of 25.75. But the reason why I thought that this was not ready to close over the resistance was, if we look at this, 30 minutes, no, it was hourly. Hourly, when we got over it, it was forming a bearish divergence on the hourly, and we were running too fast, not early. We were just running too fast, in the sense that if you look at the 5 minute, we basically went from oversold and then almost oversold, bullish divergence here, and not oversold anymore, but bullish divergence again, straight into overbought on the 15-minute chart. We're going from 730, RSI was at 35, and 10:45, 3 hours later, RSI was at 76. This is straight overbought already. It didn't make sense for us to close over the resistance, plus the hourly bear divergence. Both signs were telling me that we were not going to be able to close over the resistance today. And why is it selecting at 71? It should be 75. There we go. Okay, yeah, so unable to close over the resistance, but the chart remains strong. Dip should be bought. Any sort of dip should be bought on PLTR. Personally anticipating dips to be bought. Cathy position, ARC position is relatively big on PLTR now, and still adding to it. So we did see our first close over the GP. That is a great sign. You see how GP bounce, GP rejection. Now we're closing over the GP. What was this? This is 0.5. Yeah, so eventually we held the 0.5 on this retracement. Gap that we left behind is a little bit concerning, because we could see something like this. You know, we close over, but it's actually a fake out and come back. It's not going to drop that hard, but you get the idea. Come back to fill the gap. So there is a potential for that. Sizing, make sure your sizing is correctly. You're sizing correctly in the case that this does happen. But overall, the chart remains strong. Next one, was it Apple or Amazon? Amazon. Reaching that daily oversold position. My goodness, there's a lot of support resistance from before. Okay, so this one is no longer in play. We've lost the GP. Don't need that. It's going to be straight support resistance. Lost this trend line as well. This one doesn't really make sense. Wonder if there's a trend line here. Okay, so there is. Bounce, 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 and now we lost that key trend line. Okay, Amazon is weak, and we're gonna discuss. Actually, let's before we dive deep into Amazon, let's take a look at this QQQ IWM. So I was looking at this yesterday, QQQ IWM finally hit that GP 1.7 mark, and we are seeing slight rejection from there. Anticipation between QQQ, which is tech, and IWM, which is small caps, going forward is, I would anticipate that Rust to be relatively stronger versus tech. From now going forward, probably month, 2 months kind of thing. And I would anticipate this lower trend line to be lost this time. And we have seen bounces, 3 bounces from this lower trend line already. And now that GP forming a bear divergence on the daily, would anticipate this to see bearish action breaking this trend line, leading to weakness in tech. But with Amazon, we're reaching that daily oversold condition 27.55 on the RSI. It's a stock that, you know, any trader, any swing traders should be comfortable holding. Actually, there's probably another way to draw this. Nope. Ah, there we go. Okay, so if we use the real body, we can see a support here too. That looks better. So support did not close under. That's why we use the real body. 3 supports, and we are right at that trend line. Cannot close. We cannot close any lower. There is a good chance. This is a pretty good buying opportunity right here on Amazon. Might actually add to it tomorrow. You don't want to see what tomorrow's action looks like. We are a little bit extended from the daily 8, reaching that daily oversold condition. There is no divergence on the daily yet. On the 4 hours, just grinding down the 4 hour 8. Already bull divergence potential to form. So tomorrow, if we see bullish action on the open, start buying this up, that would form a strong hourly bull divergence. Amazon should be your top watch tomorrow. Gonna watch for that bounce. The bottom, the higher low could potentially be in from here. Bull's gonna want to hold the current price, 3,200 at the lowest. If we lose this, then that's a real concern. I wonder if this even works. I'm sure it does, just depending on how you draw it. It's lower. Okay, so we could be looking lower, slightly lower. If you draw from the pre-pandemic high. So did not close over, maybe somewhere around here. Yeah, there's a chance that we could go lower. Rejection, support. Yeah. Okay. There's a chance that we could go lower depending on which trend line you use. But as of right now, ideally we want to hold this trend line. It's what could happen from here potentially is we go a little bit lower because we are not oversold yet. So to this previous support, see a bounce to GP, something like that, before a next leg down. Let's see here. Then we will form a daily bull divergence on this chart. Then that would be the most ideal entry right there. Oh wow, it actually marked 3,100. Exactly 0.00. Damn. Right, so yeah, there's a potential for this, but risk to reward wise, even from here, it makes sense. There is a huge gap left behind that will be filled eventually. Just a matter of how long you're willing to hold Amazon. All right, next is Roku. Okay, Roku anticipating a very nice play coming up here. Daily reaching oversold, similar to Amazon. GP, this one doesn't apply. The main GP from the last whole move. So I believe we played it here on this trend line, lining up with the with the lower part of the key zone. I believe we played it here, but I think we didn't catch the whole move. It's something like from here to here, this candle. Anyways, so this lower trend line touch is coming up again. We can see 1, 2, 3, 4, 5, 6, 7, 8, 9 touches on this trend line, 9 bounces from this trend line already, and there's another touch that's coming up. This has been the money line on Roku. The money line on Roku is coming up again. So with this, it is lining up with GP, it is lining up with the top of a key zone. So if we're to see a price, let's see, if we're to go, makes sense, we wick under GP a little bit, say around 335-ish, that would be the most ideal entry, low risk entry. You place the stop, just whether if you want to place it, let's see, is support here, whether if you want to place it at this previous rejection support resistance 328, or you could just place it under the key zone altogether. Risk reward is making a lot of sense coming up, especially if we get to that trend line, that money line. Make sure you watch Roku over the next 2 days. 332, 333-ish, very nice entry spot. AC, haven't taken a look at AC for some time. So AC is closing, trading under the lower trend line of the long-term channel. Relative weak still. If we were to make a new low, we would see daily bull divergence, and that would be a very nice entry. 1-to-1 extension, saw a decent bounce, unable to break over the resistance zone, and then came back down to, looks like a GP. Yeah, came down to GP, bounced again, and then reject from that zone again. And now the daily trend is in bearish trend, but we're gonna have to see if this key support at 2350 holds. If not, we'd be looking at lower part of the key zone where we saw lots of rejections. 1, 2, closed over but essentially rejected. 3 rejections, and then became support. Closed under, got immediately bought up. 2180. If 2350 is lost, potentially looking at 2180. There is an interim support at around 23 as well. AC is a chart that you're going to have to give it time. What's another one we can look at? SCR still been trading sideways. Yep. So buyout price is at 34. It almost got to 34, 33.86 was the high, and now we're seeing a slight dip. So if you're looking for potentially easy money, this is essentially a bull flag on the daily. The buyout price is 34 bucks, so there is a $2 difference right now that you could be looking at. My personal anticipation is eventually we'll be trading near that 34 or around that 34, just under it kind of thing. So there is $2 that I want to call it easy money, but never know what happens, right? So you could be looking at this as a easy trade, stop under today's low kind of thing. All right, that's it for today's video. Thank you guys for watching. Hope you guys enjoy the content. If you know anyone that could benefit from the content that we share, the videos that we post, please consider sharing our channel with them. Get the word out. And thank you guys for watching. Make sure to subscribe, hit the thumbs up if you like the content. I will see you guys in the next video.